The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks, to the Money Masters. Half of us are here. That's because we got a little change up in the lineup here this morning. I forgot that Basil is actually doing his workshop here today. So I'm going to be doing the Money Masters show. Tom will be in to fill in for Basil here. So thanks so much for joining us. Let's go take a look at these markets out here. We've got the Dow up 67 points, S&P up 8, Composite up 15, Russell 2000. Kind of the weak link out here, up 3 points here right now. New York Stock Exchange up 0.7%, up 56 points. The NDX up 15 bucks out there. You got King Dollar down 3 pennies. Gold up 14 bucks out at 17.15. Silver up 55 cents out at 32.17. Light sweet crude up 53 cents over in Germany or over in Europe. And specifically in Germany, you've got the DAX up 0.7%, up 52 points. The FTSE up 0.3%, up 21 bucks. Over in Asia last night, you had the Nikkei up 100, the Hang Seng up 46, the Shanghai down 15. And what we're looking at here on the screen, if you didn't catch the 9 o'clock hour when I kicked things off for TFN, what I was showing you was the 30-minute ES mini chart. That's if you are watching us on Tiger TV. If you're not and you're listening in on the radio or maybe your mobile device, your computer, well, if you're listening on your computer, you should watch us on Tiger TV. You can always catch an archive of this show on Channel 10. Looking at the consolidation sideways, trading range, box range, different names for it. But what we can see here is there has been resistance. That's what the ES Mini tried to get up and over at the open here at the 9 to 9:30 session here. That failed. You can see that's the top red line, this horizontal red line that is going across the screen here. What you can also see is it's got the bottom of it, the support, the hammer candle that came in at 11 o'clock in the morning on October the 23rd out there. So not revealing a whole lot of information to us just yet. These patterns here, sideways consolidation patterns, look, right now it is on its way of making higher lows out here. But these patterns, got to be careful because they will typically resolve themselves in the direction that they came from. That would be to the downside. Doesn't happen 100% of the time, but it is something that you want to be aware of. If we take a look at what is moving in the marketplace here, you got Carbo Ceramics up 8 bucks and change. PSS World Medical up 7 bucks. That is on a potential buyout offer. Wynn Resorts having a nice morning, up 7 bucks and change. Precision Cast Parts, PCP, up 6 bucks. That's up 3%. 3D Systems trying to, it has a confirmed A to B equals CD to take it up to its highs. Triple D is the ticker symbol, up 15% here. You've got Proto Labs, PRLB, that's up 5 bucks. That's up 17%. Stericycle up 5%. Tyler Technology, TYL, up 10%. To the downside, F5 Networks really struggling this morning, down with volume, off 10 bucks right now, off 11%. Cabela's Inc., CAB, also struggling, down 16%. Spirit Aerosystems, we'll go take a look at that equity. That's down 22%. Mead Johnson, which one of our gals in the den, Angie, is short of that. That is short that equity, down 4 bucks and change. That's off 6%. Tractor Supply, TSCO, down 4 bucks and change. Cliffs Natural off 4 bucks. Under Armour off 4 bucks. Sherwin-Williams down 3 bucks, not backing up enough. I would like to. That's a nice looking stock chart here. Would like to see that thing back off. We'll go back and take a look at that. Again, our call number 877-927-6648. So let's go take a look at the currency market. I'm going to go ahead and share with you something that I shared with my clients here yesterday. Every other Wednesday, I try to do a 1-hour workshop from 3 to 4. It's also archived, so there's about 20 hours plus worth of archives of education out there. You know, we're all about educating all of our listeners, so we absolutely appreciate you listening in here. And really was showing them a trading pattern, really two patterns. There were a couple patterns here that actually showed up, and one was a continuation pattern. Now, when I take a look at candlesticks, what candlesticks are, for the most part, folks, they are reversal patterns out there. And And there are a couple of candlestick patterns that are really continuation of patterns or momentum plays. And you've got to determine what kind of trader that you are. Oftentimes, maybe you're looking to be able to add to a winning position. Well, these are great candle. What I'm going to share with you, what I'm going to show you is really a great candlestick, a set of candlesticks to be able to add to a position. It's a great momentum play. Now, you have to understand, what the reward to risk is. So it's just one element of it. So we're going to start off. We were taking a look at, this was unfolding yesterday. So as I was teaching, it was not just so much going back and taking a look at old charts, but really live into the trade. How would you work with it? Where would you add to it? If you had missed the original entry, this was giving you another entry possibility, and that is on this Gartley pattern that was out here. So I'm going to go ahead and pull this back. We'll go ahead and blow this up on the screen. You already see the results of it, but we'll go measure those results. So we're taking a look at by the way, this is the Euro US dollar. This is a 10-minute chart out here. And so if you trade currencies, you absolutely want to understand this pattern. Now, I'm going to go over it, but you're going to need more education than just what I go over here. So if you haven't had a chance to test out my newsletter and you'd like to understand some of these patterns or be able to get some education, just simply go sign up for it, at least for 30 days. Allow me to educate you, provide additional education out there. Maybe just time it with your credit card, when when your cutoff is, so that you really don't have anything out of pocket that you have to worry about. Just click on my name on the homepage at tfnn.com and then on Mastering Probability. If you haven't done it, you really should. Anyways, let's go take a look at the trade out here. So what we're looking at, you can see here, the euro, was making its way down here, made a very nice Gartley buy pattern here. That was coming off of the low on the euro at 6:10 in the morning. This is October the 24th. So the euro moves from a low of 1.29193, makes a run, wide-ranging bar out here. This wide-ranging bar, that's pretty powerful. Who was in control during that session, folks? Absolutely. The bulls were in control. Of course, it was going up against this little waterfall cascade. Would make sense that it would start to pull back. What does it do? It gets up to that high at 9:10 in the morning on October 24th. That was yesterday. Gets up to 1.29817. Then what does it do? Sets up a beautiful A to B equals CD down. You're seeing very nice Fibonacci summation numbers out here, retracements and expansions. Makes a 0.618 expansion. Here's your A point, is right up here at the 9:10 session. Your B point down here at 10:20 in the morning as it gets down to the 1.29541. Your C point makes a 0.618 retracement. That is at the 11 o'clock session. Gets up to 1.29593. Completes it on the candle at 12:10 yesterday afternoon. Just as I was preparing the workshop to talk about a different set of candle patterns out here. So this is a beautiful thing. Now, as it gets down there, you can see 1.74 is the actual numeric. It actually did this a little bit more than that. Close enough to 1.618 for me to be paying attention to it. Makes a low in that 12:10 session. Then you've got this nice little bullish engulfing candle that you see out here at 12:20. That was your first signal. Now, let's assume that you didn't get in on this trade, and you were saying, should I get in on it? Well, here's what I'm going to teach you. This, folks, here is you want to get your head wrapped around this, because quite frankly, picking tops and bottoms, it's a whole lot more difficult than a continuation play, than a momentum play that you have out there. This is called the rising three methods. The reverse of it would be the falling three methods. Well, when you take a look at this, take a look at this candle here that took place at 12:50. So just to kind of put things in perspective, I'm recognizing on an intraday basis the Gartley buy pattern, the confirmations that we got have in the confirmations that we received. How about that? That's better than the word got. So we received and then got another gift here. And that gift was the rising three method. So you can take a look at that bar at 12:50. I'm going to go ahead and blow this up. Pretty wide-ranging bar. Certainly not as wide as the bar coming into September 10th. But then, if you've ever gotten into a trade and then all of a sudden you start to see it pulling back, well, don't just, don't get too concerned. This here was a beautiful thing because you've got this moving up here, and as it starts pulling back, you can see small bodies, relatively small bodies out here, all staying within what? All staying within this candle here. This, folks, when you break that, if you stay within that candle, you don't break it down, you don't let it close below the candle. In this case here, the 1250 candle was 1.29461, and you simply blast through it, let the market blast through it, within the 2 to 5 candles, maybe 2 to 7 candles out there. That is a continuation move. And you want to be paying attention to this. If you had missed this, you got another signal to go ahead and get into this equity here at 1340. That was at 140 in the afternoon yesterday. Now, when you trade Gartley patterns here, so I'll go ahead and give you just a little bit of education here. If you trade Gartley patterns, there are, and you've heard me talk about them, there are different exit strategies. You want to be paying attention to it. First, you know that if you go to the A to D move here, so you're going to go from the high at that 9:10 all the way down to the low now at 12:10 in the afternoon. You're going to make sure that you've got your Fibonacci ruler. You're going to have 0.382, 0.618, and 0.786. Because there's really 5 possible exit points here on your exit strategy, and you want to make sure that you're waiting for the bears to give you those signs. They'll build the signs. They will absolutely tell you when it's time to go ahead and start getting out of a equity. Get into an equity as well. In this case here, it makes a retracement, gets almost up to that 0.382 level. Then it does the rising 3 pattern. You go ahead and you close above it again at 1340. That's a good sign. That says what? Says that momentum says you're probably going to go up to the 0.618 level. What does the equity do? Actually gets up to the 0.618 level at 220 in the afternoon here. Gets up there. Once you get up to the sweet 618, what are you going to do? You're going to get off the elevator. You're going to come visit us at TFNN. The market does the same things. It gets up at that 618 level. You need to expect that it's going to pull back. Pulls back just simply for that one 10-minute bar session. Resumes itself higher at 2:30 in the afternoon. Where's the next level it's going to go to? It's going to go up to 0.786. What's the next level after that? That's going to make a 100% move of a move where it starts all the way back here. Of course, you had that nice wide-ranging bar. So as we come back and we take a look at this, it gets up. It makes a 100% move of a move. Does that into the, let's see, make sure I do my math here, 10:20 in the evening last night. Now, the ultimate setup here of a Gartley buy or Gartley sell, this is a Gartley buy, is that what it's really doing, it's really giving you the C point of a new A to B equals CD. So now let's go ahead and take a look at this. You start with your A point all the way down at that low at 6:10 in the morning, your B point out here at that high that came in at 9:10. Your C point happens to be where we saw that reversal, where we saw that bullish engulfing in essence take place. 1-to-1 out here would have taken it to 130. When it got up there, are there any bears really showing up on the way here? Absolutely not. And what does this do? This finishes out at 1.1 to 1.272, A to B equals CD. Before the bears show up for work, they showed up for work at 4:50 this morning out here. That is multiple patterns there. How is that for a little education moment out there? Folks, you want to learn how to trade the rising 3 methods, the falling 3 methods out there. It is an easier pattern to trade than reversals. Absolutely easier. You've heard the trend is your friend. We at TFNN, we're certainly your friends. We are the trend out here. But if you want to understand about the trend is your friend, go sign up for my newsletter service. You'll get the full education on that candle pattern. You also have access to me for 30 days by phone, by email. Do it. Time it with your credit card so that I can teach you, so that I can offer you that gift for 30 days. Dow up 70 points, S&P up 9. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. I'm your co-host, Steve Rhodes. Tom will be filling in for Basil today during the next hour. Basil doing his Master Trader course out there. You know, we were looking at the ES-Mini, the S&P Futures 30-minute chart. Same pattern, horizontal, sideways box consolidation area set up by the Dow Futures as well. You can see it's up towards the top of its range here. Bottom of the range being set up by the hammer candle that really disguised itself as something else. So I was not surprised to see that get taken out. That was the 11 o'clock session on the 23rd of October out there. You got to close below that area here. At 4 o'clock yesterday, got back up inside it. Not too long after that. Actually, had a little bullish engulfing candle at the 8:30 session here, and this really was a hammer candle that was disguised as something else out there. Don't know if my special report is still on the front page of TFNN.com, but you want to understand that as well. So with the market being up, you got the Dow up 71 points, the S&P up by 9. You can take a look at this, and they really haven't moved much. Haven't moved really since it's been in this consolidation pattern. The high of it was established at 2:30 in the afternoon, October 23rd, so 2 days ago. So, it's struggling. It's struggling here right now. That is on the Dow futures. We took a look at we were taking a look at the euro for that trade setup. Of course, what it did was it gave you the bearish engulfing candle up here on the 10-minute chart here, pulling back now. If we take a look at where this thing has pulled back to, Let's just go take a look at our Fibonacci retracement ruler. Let's go from the low. That was our A point all the way up to the really was the D point. That was really about buying and selling the D point there. And what you can see here, it's pulled back and not fully to the 0.618 level, making an A to B equals CD down. Let's go take a look at that. I don't see any bulls here. This is really intraday. This is the 10-minute chart here on the euro. This is probably the first A to B equals CD that I would draw. So it did get down into the 1 to 1.272 level, but no bulls in sight yet on the 10-minute chart for the euro-US dollar currency pair. Let's go take a look at gold and silver out there. We got gold trading up now 16 bucks. $15.30 out at 17.16, and gold, as far as got to a oversold area. Did that yesterday as it got down into the 16.98. Also got down close enough to the 0.382 retracement here. We're going and starting off from the low of May 16th. That low, 1526.70, all the way to the high that was put in here on October the 5th. So it is pulled back to where? To the 0.382 level. What happens when an equity gets to the 0.382 retracement? It lets people off of an elevator, right? It's where you should first start to see, the market do so the whatever you're looking at. It doesn't matter whether it's a futures contract, an ETF. It's just simply where you're going to have a pause in the action out here. This says to me that this is doing, I wouldn't be getting all excited about gold. I think gold has got more to go to the downside here than it does to the upside. Longer term, be bullish gold, and I think this is going to give you an opportunity to get in maybe around the 1630 level. That would be a nice pullback, a nice healthy pullback, just simply a 0.618 of the move out here. Got to pay attention, okay, because this could be, you got a bullish sign out here, but you really have to understand that it is really doing today what it should do. We can go on any chart, take a look at retracements, and you'll see when it gets to that 0.382 level, it is typically going to pause. If it just motors on through it, that is telling you, look out, because that's an area where when you run a little race out there, and this is nothing more than a, what do you call those races where you got tagged teams? You know what I mean. Somehow it's gone from my mind out there, but it'll come to me, or it'll come to Al, who's in the production room. So I take a look at gold out here, still very bullish, but I think it'd be nice and healthy for it to pull back into the 1630 range. We'll see what happens with gold. Silver doing has the same setup out here. Let's go take a look at silver. Silver getting just below the 0.382 level, not by much, coming off of its swing point low from June 28th. That low was 26.10. Made a swing point high out here of on October the 10th. Did that at $35.44. Pulls back in that 0.382 level. So doing what it should do as well. In essence, I just call it letting people off of the elevator. It's easier for me to just try to connect the known to the unknown, because it's nothing more than building floors out here. I do believe in silver that it has another floor to drop down to. $29 would be the level I would be targeting. That's on silver. Platinum. What is the platinum here doing today? Platinum up 16 bucks and change, out at $15.79. 877-927-6648. Dow is up 56 points right now. S&P is up 7. We'll be right back, folks.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow up 42 points right now, S&P up 5, Composite up 13, Russell 2000, the weak link in the chain, up a couple of points here. I've got a longer-term chart of IBM. We got the weekly chart of IBM out here, and what I drew in during the break was the rising price channel that it's in. Now, I use trend lines. I also use channels. Two different things out there. On channel lines, what you want to identify is the largest number of co-located opens and closes. What I mean is you might be using a close session as one spot. You might be using an open session as another spot. So you want to find the largest number that you have. If you go to IBM on the weekly chart and you start off from the low coming in November of 2008, and you look at the close out there, 74.88, that's really your first touch point. Happens to be the open, certainly on the next trading on the November 28th week, which happens to be the 75.74 area. You'll run into another open session on March 13th, 2009. That was at 84.70 out there. You run into two more here, coming back to the weeks of June 25th. July 9th, you come into it with regard to September 3rd, September 10th out there. And so what you can see, so the trend line along the channel line, the rising price channel line along the bottom, very important. Why is it so important to take a look at IBM? Number one, just because of the rating structure, how about that? waiting structure with inside the S&P because it is a lead dog in the clubhouse and because, it had some volume on the way down. So this area here has to hold. You can see it's traded right down into that. If we go switch over to the daily chart, and I'm actually looking at IBM. What I'd love to see IBM do actually is come down and test this window that is still held as a very, very nice support area. That's the window from the January 19th, 2012. The top of that is 182.36. The volume out there, 8.5 million shares. Last time that it was tested, the only time that it was tested was on July 12th out here. I'd like to see it come down and hold it again. If it does hold it, you want to have a third test out there to really tell you that you've got a solid window, a solid support range out here. So it would have a little bit, of work to do to get down there. It would also be breaking that trend, that rising price trend channel out there. So breaking that longer term channel, that actually would not be a very good sign from an IBM standpoint. And I'd have to say on the daily, I'd give your weight to the larger picture out there always. So monthly over weekly, weekly over daily, daily over any intraday chart out there. Let's go to Larry in Cheyenne, Wyoming. Larry, thanks for calling. Thanks for holding.
Oh, thank you, Steve. Really enjoy everything you do. I have a question about, you guys are the best. I have a question about AN, AutoNation.
Okay, absolutely. Tell us what you're doing, how it can help you.
My timing was a little off. I did short it. It had you can see, the huge butterfly that it developed, and it was up there floating on really light volume. You got that distribution.
Yes.
And so now I'm okay now as of today, and I see that, the bar today has engulfed just like 15 daily bars, so those people are all, as you say, trapped.
Yes.
What kind of, and I see a benchmark volume, an obvious target on the 19th of July.
21st. Okay. All right. Okay.
Okay.
Gotcha. Okay. Yeah. So you're okay. I see where you're going. All right.
So do you think that, with the way the MACD and everything looks, and the volume's huge, do you see that as a possibility, as at least a touch target, the high of 43.72? They just had bumper crop earnings, so I just figured this is a normal 382 type or confluence 382 retracement.
Sure. Okay. So let's go take a look. So the first area, as I step back, and you did a great job here. Congratulations on your trade, and a good job from a technical analysis standpoint. Now, what I like to do is I like to step back one at a time. And what I mean there is the last sign of strength here is just is really right around. Well, really, you got two signs. You get two high volume supply areas that could hold it up, and that is the September 21st. 43.75, as well as the July 19th area of 43.72. So you're going to have to pay attention as the equity gets down to that area. So that's the first place. And what you also have here, and it's not tested, looks like you might have a little bit of a window. Let me see. The high on September 20th, 42.12. The low of the prior session, 42. You don't. So that's the first place for you to be paying attention to it. And if you close inside there, you're coming in with more than 1.7 million shares. That's really what you want to see, because as you pointed out, that July 19th candle's got more volume. If you're coming in there with more than 1.7 million shares, then then you want to go ahead and stay tight. Now, what this is going to do as it approaches that area, it's going to get into an oversold condition pretty quickly, and so it will need to work that off. It will need to work that off either by traveling sideways or possibly bouncing up a bit. So you got to be, you're going to have to watch that area. As far as let me put this thing on a weekly chart. I'm guessing you looked at it on a weekly and a monthly as well.
Yeah.
So on the weekly chart out here, if it cracks that July area, and you should. It's just got pretty strong support. If I just take just draw a line across the area here and don't get too caught up into the exact area, it looks like this is where you would really likely travel down to, all the way back down to the bottom of the range. $33. So it'll have to crack the areas that you first saw. You'll want to see it get and close inside the area of about $40.11. Gets back inside there, then it could go back to the bottom of this little support range that it built out here. So that's what it looks like to me. I think it would be too much to presume that it could travel all the way back to the October 2009 level. It's got some pretty good horizontal support, just in that area. So looks like a good trade on there. So congratulations on that. And volume-wise so far today, 329,000 shares coming into that 1.7 million. So I guess mathematically, let's just go down and take a look at the intraday, see if the volume was all front-loaded on this equity here. Did they come out with
earnings,
Larry?
Today, and the earnings were record. Yeah, but they're saddled in a lot of debt, and I don't know, and it's just the pattern, I think. I have no idea. The pattern was so overextended on a butterfly.
Yeah. Well,
so I'm not expecting a home run here. I personally, because of the weekly volume disparity, I think if you can hit the top of the July weekly bar, which is around 43.72, which has huge volume, I think that's enough risk.
Yeah. Look, go out there. You use different technical tools, a MACD or what have you. I'll give you go put up the relative strength index. Make sure you're using the 30 and 70%. And use a 14-day smooth average out there. What you'll find on this equity is as it gets down to that 30 level, which is starting to get you into a oversold condition, this thing has pretty much bounced. So just assess the trade as it's getting down there. It works a little bit. It works a little bit. It works a little bit better than the MACD does. Okay.
All right. Well, this is my first trade that had a whopper reversal, and it's kind of exciting. So
congratulations. Hey, thanks for sharing that with us. You bet. Have a great day.
Bye-bye.
All righty. Let's go take a look. Let's see. You got the Dow trading up 41 points right now. Let's go take a look at Under Armour. Under Armour down 7% here this morning. Let's go see if there's any kind of volume behind the move. UA is the ticker symbol there. Gapping down. Looks like a little bit of a gap with some volume this morning. This could be a nice trade setup. So let's go take a look at this. This had a nice sign of strength. Okay. Oh, this is pretty nice. Okay, so now what Under Armour is going to do, it's going to test the window here. Oh, it's a beautiful thing. Beautiful trade. I wish this were, Friday's only a day away. I wish it really were Monday, full moon Monday here. I do expect the markets to pull down into Monday, at least tomorrow afternoon. What we do see here, Under Armour coming and testing the last sign of strength out here. So that is going to be July 24th. Gap's up. The low of that gap, 51.70, hasn't been tested yet. May be tested today, perhaps tomorrow, perhaps on Friday. If that area gets tested and holds, volume-wise, it's got almost 10 million shares, 10.2 million shares. Thus far today, in an hour and 45 minutes, 3 million shares. So it's got some good volume. If the volume starts to dry up here, that would be a bullish sign. That is on Under Armour. However, maybe it comes all the way back to where it broke out. That would be a nice trade as well. That would be coming back to the July 23rd candle. Of course, it's going to be going again. Now, it all depends. You got to benchmark it on today's volume. So what you're looking for today, without question, is some lighter volume, and the lighter volume go against that July 24th area. You get a close below 51.70. Says, okay, go ahead and repair the window. Go ahead and fix it. Go down to the breakout session, which was July 23rd. You'd love to see it come in there with less than 2.9 million shares. That would be a nice trade setup on Under Armour. Let's go take a look at this on the weekly chart out here. Let's go see what the weekly is doing. On the weekly, so Under Armour making and completing the 1-to-1 A to B equals C to up, or very close to it. The completion would have been $61.93. Actually got up to $60.96. So close enough for my work out here. Actually, if you take a look at that C to D leg, tells me that it's still got some more strength left in the move. So that's a nice confirming signal there. Let's go ahead and just simply draw the chart here. And on a weekly basis, let me refresh my screen, get the proper bars out here. There we go. So here's that breakout session, which is traveling into right now. And that has, on the weekly basis, 20 million shares. not necessarily counting today, but only 5 million shares this week. So the weekly is nice. Now, the low of that weekly was 47.33. Was that the level on the daily? Was that the breakout session? Let's go see. The low was 47.33. It sure was. So Under Armour, if you're not writing it down on your pad, I certainly am writing it down on mine. You're going to want to, again, pay attention to today's volume, but that looks like a pretty nice little trade out there. Let's go take a look at what else we have here. Let's go fishing. We're going fishing here. If you want momentum plays, I'll show you a momentum play for sure. That momentum play is Intuitive Surgical. So let's go take a look. ISRG is the ticker symbol here. Intuitive Surgical took out a resistance area. That resistance area was the gap down the following window on July 19th. Moves down here with 1.5 million shares. The candle that it was coming down into was July 19th. That had 500,000 shares, moved up into it with 647,000 shares, doing that on October the 22nd. That area there, no longer an area of resistance. That window is completely repaired out there. It's got new glass in it, and this says to me a couple nice signs of a strength out here that Intuitive Surgical wants to go make a run for this high volume high. That's at 594.89 out there. It's at 544.90. Get the market moving in the right direction, which is doesn't look like today is going to be it. But if you're looking to buy some strength out there, Intuitive Surgical looks like a pretty good trade out there. Let's continue fishing out here. Let's go see what do we got here. What do we got on the upside or downside that we haven't looked at? Percentage-wise, Proto Labs, PRLB, is the ticker symbol. So let's go take a look at that. That is up 20% this morning. So let's go see what that is doing. This might be PRLN. Doesn't work. Nobody out there has PRLN as their ticker symbol. PRLB, though, is Proto Labs. So gapping up this morning with volume. Let's go see if this gives us any opportunities out here. So you got an IPO. Looks like it's an IPO going back to February 24th. That area was tested, gapping up this morning. It's got some volume. Let me see if there's some earnings behind this. What do we have? Proto Labs. They've got earnings per share 26 versus 22 of last year. Reports record revenue, but doesn't give me what it is. There we go. Net income. Come on, baby. Just says it's up 21% out there. But as I take a look at this equity, I don't know. I'm going to pass on Proto Labs out there. Let's go take a look at Royal Caribbean. Let's go see what Royal Caribbean is doing. RCL, the cruise line. They're cruising this morning. The high seas, Royal Caribbean is up $3 and change. That's up 2%. Gapping up. So let's go take a look at this equity here. See what it is doing. Coming into an area where it's trying to repair a window. So it's coming into an area that is an untested area of resistance. That goes back to July 27th, 2011 out there. That candle low, session 35.38. If it gets up there, closes below that, you've now got an area of resistance. That is on Royal Caribbean Cruise Lines. 877-927-6648. So we go back and peek at the futures out there. You can see the Dow futures resistance area held, headed back down towards its support range on this sideways move. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll
You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, and Tom is going to be doing the show for Basil here this morning. Basil out there grooving and moving, teaching folks the Chapman Wave, so that is a wonderful thing to do on a terrific, thankful, thoughtful Thursday out here. Right now you got the Dow up 29 points, the S&P up 3, Composite up 5, small caps down just slightly here. Couldn't bust it up. It's not going to bust them down here just yet either. As I take a look at the charts, just headed towards the bottom of the sideways trading range out there. Probably what's it all about? Probably about Apple. Going to have Apple out with earnings today at 4:30, and that will lead the market in one direction or the other out there. We've had a lot of earnings misses by the big folks, the big boys, the big girls out there, and so everybody's got their weight on Apple. Of course, that Microsoft little tablet out there, that is a pretty cool looking machine with the keyboard. Just looking for Apple here on my screen. Let's go see what Apple is doing. Down $2.65 here. So really having a day of indecision. We do know Apple broke through the trend line. It has been testing that area. We know that if we take a look at Apple, here's what we want to take a look at and see where is it that it could actually trade to. And so first thing on the daily chart where I would come to is this little high volume bar here, $514. That would be a $100 potential drop if the it doesn't matter what the news is. It's really what is the market going to, how is it going to respond. So that's where you've got high volume on the daily chart on Apple. On the weekly chart out here with Apple, let me try to put the volume up here. The weekly chart of Apple takes you to, where does it take you to? Takes you to the week of the highest volume out here. Looks like that is the high there, 620. So at 614, you're already inside there. The bottom of that is 570 on the weekly chart. Really what you'd look at here is the last swing point on Apple is on the weekly chart is May 18th. And that low, 528.66, 567, is the high out there. And, on the weekly chart, boy, that is not a good looking chart out there. And you got that little doji high out there on the weekly chart. And been nothing but bearish candles on a weekly basis. So it is sending out some kind of signals. I would be careful if you were long out here, because the market is revealing a message, and it is bearish tone. If we go take a look at the monthly chart as well, that really is not a good sign. Now, obviously, the month is not over, so good news, the market responds well. That'll go ahead and wipe out this monthly candle. However, that is a very bearish candle, because if the market does sell Apple off, it's going to get even more bearish. And on the monthly chart, you're looking at it taking on that May 31st swing point, again, 528.60. So it's got, it certainly has upside potential. I think it's got more downside potential than upside potential out there. So the market probably will just simply continue to trade sideways out here. The Bulls had a chance early this morning. The Bears having the most recent chance, but they don't have enough energy to push this market down here. So just expect it to move sideways, and then we'll see where it goes. Stay tuned, folks. Tom will be up next, again, covering for Basil Chapman. I've enjoyed being with you for the last couple of hours. We have Daryl Martin from 1 to 2, Diagnostic Trading Hour. David White, 2 to 3. The Ken Shreve Show from 3 to 4. And none other than the Tom O'Brien Show, 4 to 6. A quick peek over in Europe. See what they are doing. Germany up 27 points right now. The FTSE just above the flat line, up 4 points. And have yourself just simply a terrific Thursday. I'll look forward to seeing you tomorrow morning, 9 o'clock sharp. Have a great day, folks.